Well, joining us now on the program, Rabobank has released their annual 10-year outlook on U.S. grains and oil seeds, and there's some interesting trends and things that are of note in that new outlook. And joining us now for a conversation to tell us more about it, grains and oilseeds analyst with Rabobank, Andrick Pyan, is with us here on the show today. Andrick, thanks so much for joining us on the program. How are you, sir?
Good. Thank you, Jesse. Thank you for having me over. And happy to be on the show.
Let's just start. Kind of give us that 1,000-foot view of the annual 10-year outlook here for U.S. grains and oilseeds. I know a few different trends that we could dive into more in depth, but lay this out for us. What were some of the big trends and takeaways that you guys found with this new Rabobank report?
Yes, Jesse. Just so you know, we publish this report every year, and we try to capture what are the major trends in the next 10 years. One of the things that really comes out from this report is, the U.S. struggle in exports. I think it's not a new story, but it opens a question what the outlook is going to look for the U.S. in the next 10 years. And I think this is one of the central trends that we describe in this publication.
Let's talk about that a little bit more, that demand picture. I know it's something that a lot of folks in the trade have been very much concerned with, and it feels like a lot of competition from other countries around the world. It's much been talked about. South American production, of course, competition in wheat from the Black Sea region, Russia particularly, things like that. So, and talk about some of, maybe those global factors that are having an influence on some of our demand and exports here for U.S. commodities.
Definitely. You touch on an important point there, right? The key word here is global competition, and definitely that's something that we continue to see. In fact, when you look at the trend, if you look at historically, back in the 1990s, the U.S. had around 50% of the global exports of corn, soybean, and wheat globally. Now, if you look at today, the U.S. only is close to 22% of that global export, which makes you wonder, while global trade has grown, really U.S. trade hasn't keep up with other countries. So, when you start looking at global factors, some of the situation like Brazil, production continues to increase. They continue to make good investment in infrastructure. They're developing new roads, railways, new port capacity. Those are the factors that continue to make Brazil more competitive. Then, if you switch to the Black Sea region, you continue to see Russia, Ukraine, even exporting, given the situation there right now, and they continue to be good exporters. Of course, over the last couple of days, we have those news where you're starting to see drought in the Black Sea region. But when you look at the next 10 years, I don't think the situation is going to change, really. These countries are focusing more on are becoming more export oriented. And then you have the strong dollar, right? That kind of becomes a challenge for the U.S. too. But you also have to look inwards, right? Start looking at what does that mean for the U.S. in terms of infrastructure. We continue to see the Mississippi River water levels come down. Today they're looking much better than they looked the last 2 years, but that's something that we need to keep in mind moving forward. Are we going to continue to see more droughts that are going to slow down exports for the U.S.? And then you have the Panama Canal that's in the same situation. So all these factors really start to, get together. And when you look at the U.S. exports, it just looks a little bit more challenging than before.
Well, and thinking about those challenges, and another one I want to ask you about and get your thoughts from what you guys found in this Rabobank report, U.S. planted acreage. What are some of the trends in terms of corn, soybean acreage, wheat? You could throw other commodities in there too, but the big three, what are the trends showing on U.S. planted acres moving forward?
Yeah, so for the long term, we continue to see that when you put together corn and soybeans, we see that for the next 5 to 8 years, we're going to see corn and soybean acres around 180 million acres. The one that we see that is probably going to start coming down is wheat acres. We saw that spike during, inflation, during COVID times, when Russia invaded Ukraine. But we see that now, that price is starting to come down compared to previous, those years or during COVID times. So I think for the U.S., we're going to start to move back to what we saw on the pre-COVID era, where we see like 46, 47 million acres on all wheat. But one of the things that really, came out from the report is that we see that soybeans might be starting to increase more acres just because of the crush capacity that we continue to see growing in the U.S. We see that corn probably is going to stay around 90 to 91 million acres, and soybeans probably is going to stay around 88 just to satisfy that need. But part of influencing soybeans and not growing more than expected, it's because we see that Brazil continues to export more soybeans, and part of that is Brazil is taking that international demand from the U.S. So really, if you put together, U.S. exports, what we see in the next 10 years, and the crush capacity, there's not much need for U.S. soybeans to go above 88, 89 million acres.
Talking with Andric Payan, grains and oilseeds analyst at Rabobank. So, with all that in mind, what do farmers need to think about? What should they be looking for? We're kind of in this down cycle right now for prices. And I know farmers have been watching that. They've been watching their cost of inputs going up, things like that. What can we expect at the farm gate for prices here in both, I'll say, the short term and the long term outlook here?
Yeah, that was an important point in the report, is where we see prices in the next 10 years. And really something that came out is that we definitely seeing a downward trend for corn, soybean, and wheat, the three major crops in the U.S. But we're probably going to stay higher than what we saw pre-COVID levels, just because you mentioned it, the inflationary pressure that we lived during COVID is still embedded in the system, and higher cost of inputs and things like that are keeping pressure on prices. So we're probably going to see prices higher than the last 10 years, well, pre-COVID level. But definitely, we're going to see some pressure on margins in the next 3 to 4 years.
Well, we know that there can be various shocks to the market, black swan events, things like that, and those are pretty tough to predict. But is there anything that you guys found with the report maybe that we could potentially be on the lookout for that could maybe shock the market and really impact the balance sheets here in the U.S.?
Well, one of those is, what's going to happen with biofuels. I mean, there's, it's been a hot topic over the last couple of years. And I would say that, some programs are more supportive than others. But the reality is that the whole world is starting to move to a more biofuel-centric model. So, I mean, you see that in the US, you see that in Canada, you see that in Asia. So I think from that standpoint, oilseeds are better supported right now, as where we see it right now with the programs around the world. But, geopolitical risk continues to be a top of mind. I mean, obviously where we are today compared to the last couple of years, we're starting to see that shift geographically of, where China is buying grains now, grains and oilseeds. I mean, just like a couple of days ago, China had this agreement with Argentina to start exporting, or Argentina to export corn to China, right? So top of mind is really where does the U.S. need to start developing new markets? Because if that doesn't happen and the situation globally becomes a little bit more difficult, again, what we're going to do with a lot of grain, right, domestically.
No, and that's a great point. And I know in terms of this soybean crush, I mean, it's something that we've been talking about it, and it feels like we're getting closer, but we haven't seen that explosion, so to speak. But we would presume in the next few years, if we can get the policy right, things like that, that's going to be one of the biggest opportunities for farmers here, it looks like, Andric.
Definitely. I mean, we continue to hear, renewable diesel, SAF, all these programs are becoming, new to the market. So in a way, it reflects that there's appetite for domestic demand. It's just we need to get the policy right.
Well, as we wrap up our conversation, I know we're going to post a link to the full 10-year outlook report from Rabobank on our social media website, so folks can go reference that as well. Andric, before we let you go today, anything final you would share or reiterate to farmers, ranchers listening in as they're thinking about this current market environment right now?
One of the things that, positive here that I would like to say is that domestic demand really remains robust. It's obviously not growing as fast as you see exports, but one of the things that has helped the U.S. stabilize prices domestically is the robust domestic-based demand, to be honest. That's why it's important to keep an eye on that. And, as it has been, robust, we need to start thinking about the next 10 years and see, how can we continue to increase that domestic demand.
Well, we appreciate the time. We'll look forward to having another conversation in the future with that grains and oilseeds analyst at Rabobank, Andrick Payan. Andrick, thanks for being with us here on the program today. We'll talk to you again soon.
Thank you, Jesse.